Hey everyone, semiconductor company Marvell Technology reported first quarter fiscal year 2025 earnings results that sent the stock price lower. In this video, I'll review those latest quarterly earnings results and I'll update my recommendation for Marvell stock. Coming into this quarter, I did not have the stock rated as a buy. I told investors not to buy this stock. So following the results, you're going to want to tune in to see if the lower valuation now means I'm upgrading the stock. I'll review the causes for the stock price decline, the areas of improvement for Marvell Technology, and the things it needs to improve so that investors can become more enthusiastic about this semiconductor company. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, Marvell Technology reporting Q1 net revenue of $1.161 billion, and that was down 12% year over year. Gross profit margin came in at 45.5%. So the company has several business segments and most of them are not doing well. And then it's offset by the AI segment that is thriving. So let's look further. Marvell saying that it delivered first quarter revenue of $1.161 billion, which was above the midpoint of guidance, driven by stronger than forecasted demand from artificial intelligence. Our data center revenue grew by 87% year over year, with the start of a ramp in our custom AI programs and complementing our substantial base of electro-optics revenue. So, that gives you a clear picture of what's happening with the business. The data center business grew 87% year over year, and still the company's overall revenue declined by 12%. That gives you a picture. Nearly all other segments are in decline, but the AI segment is thriving. So they're saying, we see a favorable setup for the second half of this year, driven by continued growth in data center and the beginning of a recovery in enterprise networking and carrier infrastructure. So the company is optimistic about a rebound in some of its segments, including the carrier infrastructure, 5G development, and that will somewhat offset those losses and declines in those areas, but not by very much. The company forecasting second quarter revenue of $1.25 billion, which would be a slight improvement from the $1.16 billion in the first quarter, and another slight improvement in gross profit margin, which is expected to come in at 46.2%, which would be an improvement from 45.5%. Now, the company did lose 25 cents per share on the bottom line in Q1, and they expect those losses to continue. For the next quarter, they expect a loss of 20 cents per share on the bottom line. So the company does have a major growth driver, a major growth catalyst from artificial intelligence, but it still has several other business segments, including the carrier infrastructure and personal computing, that are in decline. So it's offsetting each other. It's not really generating strong growth overall. Longer term, Marvell Technology has done a good job in growing its cash flow from operations to sales. It generates a 24.88% margin in this metric. Now, that's in stark contrast to its operating profit margin over the trailing 12 months, which has turned negative, and it was negative 7.93% in the trailing 12-month period. And this metric has been volatile over the last decade. No real signs of improvement. The main difference being non-cash expenses like stock-based compensation and depreciation and amortization. These cause losses on the bottom line sometimes, even when cash flow from operations are positive. And in the latest quarter, it was a similar story. While the company did generate losses on the bottom line and those losses worsened, the net loss increased to $215 million up from a net loss of $168 million in the same quarter last year. But the cash flow from operations improved to $324 million, up from $208 million. Now, the improvement in cash flow from operations came from the working capital category, which is the bottom half of this range here, which is less preferable than it coming from the top half of this range here, which includes the net loss, net income, and some of those non-cash expenses. These items here are changes in assets and liabilities, changes in inventory, for example, the timing differences between accounts receivable and accounts payable. For instance, if you receive your payments from your customers earlier than you make payments to your suppliers, that can create a temporary benefit in terms of cash flow from operations, but those benefits are not sustainable. It was just a timing difference for that quarter. What's more sustainable is generating profitability when you add back those costs like depreciation, stock-based compensation, and amortization of intangible assets. That's more sustainable in terms of increasing cash flow from operations. You can't continue to find beneficial timing from accounts receivable and accounts payable like Marvell benefited from in its latest quarter. Now, I reminded you that I did not have Marvell stock rated as a buy coming into the quarter. I had it rated as a hold. And given that the stock price is not cheap, it's trading at a forward price to earnings of 27 for a company that's still generating year-over-year decreases in revenue, losses on the bottom line, failure to generate economies in scale, and demonstrating growth in operating profit margin for the longer term. Sure, it has a strong AI segment that's growing very quickly, but the rest of the business is not growing very well and is not expected to grow very well in the next quarter or even in the current year overall. So all those things being considered, if I were to update my recommendation, I would say to keep this stock rated as a hold. I still wouldn't be buying Marvell Technologies stock at current valuations with its current prospects, even though that growth catalyst in artificial intelligence could change the game for Marvell Technologies real quick. If it continues demonstrating that level of growth in that segment, 80% growth, and that growth persists for several quarters, that could offset the declines in the rest of the business, and by the end of the year, it could be in a much better position. So this is one to keep an eye out for. I think it's a little bit early for Marvell Technologies at current valuations, but I will continue updating this one and I'll keep you posted on Marvell Technologies stock. Now, if you have questions about this list, my list of buy, hold, or sell recommendations on this sheet are only available through these videos. So if you want to see more of it, subscribe to the channel and watch all of the videos that I make, because I will usually show this list in every video, and you not only get to see my rating on Marvell, but now you also get a view of my ratings on Dell, Twilio, Upwork, and all of the stocks that are around this range, and I'll try and give you a better view of all of my picks in this view on my videos. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.